Okay, welcome to Swing Trade with Cycle Channel. This is our update on the Dixie. Very important index, the dollar index. It's measured against a basket of six other currencies. We're only going to look at the dollar index today. Other videos will continue to look at other components of that basket, but we'll focus on just the Dixie itself today. And so we talked about this idea. Look at this. That is a low. We're low, right? So this was day 15 of this rally. Then we rallied up here to day 13. That was a double top bearish. Made this low on day 17. And again, so this is November 2nd. It's the night of the Fed meeting or the Fed announcement having happened. They raised 75 bips. And then we got this big reversal candle, right? So like we're going to need to get below this low for any bearishness to really happen. And that is a low of, 110 spot 426, right? And we're up here at almost 112, right? And so this is just consolidation so far. We're gonna have to watch it, and we can zoom into some lower time frames. But if we look at the hourly chart, right? So this is the candle that kind of happened during the Fed meeting. You have that. That's the thing. You have that initial move, and this was your initial move. It was a big, ugly red candle, and then it completely reversed. Didn't quite go red, didn't quite go green, but completely reversed. Gave you a little bit of a hammer type thing, and then you made a swing low, right? Once you went above that high there, that was your swing low. Another higher high, and then we started to consolidate, and now we're in a little bit of a downtrend, or in a downtrend, I should say, plainly on the hourly chart. And so it's a question of, first step, we have to get back above this high, right? The high of that candle. So just call it 112 spot 05, right? That tells you we're in business, and this low is holding, right? Because this low took out all these stops, right? So that actually maybe is what set you up for the upside, to just kind of springboard from here. So that's your lower time frame real quick look, and talked about this in a tweet. If you're not following on Twitter, definitely take a look at the link in the description. That's where I try to put out the updates that are as timely as possible. But this idea that we're trying to make a weekly swing low, we need to get above 112 spot 534, and we're not quite there yet. But this nice green candle on the weekly so far is definitely trying to set us up for that. And again, we could get a massive reversal tomorrow and Friday to complete the Fed volatility. And we know we have the non-farm payroll, the jobs report on Friday morning at 8:30. But that's the critical thing. If we can close this week above that 112 spot 534 level, that makes week 21 a swing low and a potential ICL, right? We close below the 10-week moving average. It's like it kind of fulfills all the parameters. And look at these little pullbacks we've had. Little pullback, higher high. Little pullback, higher high. Like that would kind of follow the trend here. And of course, at some point, this thing is going to break down massively, and we're going to kiss the 200-week moving average. But that certainly doesn't have to be now, right? We could still be seeing more upside, especially when you think about the macro environment, the way the bond market is wobbling. And so that's your weekly. And then most importantly, your monthly, we talked about this. This is an inside month, right? So September had this big upper wick, which made it so that we got this inside month in October. And now November is an inside month of October. So we have an inside month of an inside month. So the October range is what we need to break out of first. That's a high of 113 spot 942 and a low of 109 spot 535. That's important because once we break above that range, it tells us we're probably going to test the next level, right? So like if we break to the downside, then we're probably going to test the level, like the 107 spot 702 level. And if we break to the upside, we're probably going to test that 114 spot 778. So quite binary, which is exactly how we like our trades, right? And notice we're nice and green right now. Now, it's just 2 days of trading. Again, super, super early for the monthly candle. But that's the level. These are the levels you want to watch. And I'd say they're zones more than they are levels. But you want to get a sense of the boundaries of that zone, if you will. So that's the setup right here. It's definitely very, like, the risk reward is, like, basically it's very concrete what the levels are. So you're able to set up a risk reward that kind of matches your risk profile, is what I would say, which is really exciting. That's not always the case. So that's the lay of the land for the Dixie index, the dollar index.